Good morning. What is up? How is everybody doing? Especially all my uni people out there, my noti people, all the people that are here. What's going on, everybody? Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. How's everybody doing on this fantastic Tuesday morning? We got a lot to talk about today. Hopefully my voice will allow that. Still getting over the cold, so I'm still congested, still everything. So if you can just look through that and focus on the signal that we will be providing, then you will be fine. All right. So with all that being said, Mr. Bitcoin, a little bit down on the day. You can see here that you're testing the daily open right now to see if you want to be a bullish or a bearish day. We got Euro down 0.09%, which is pretty much at the open. A lot of things pretty much unchanged on the day. SP 500 down 0.51%, so not quite a whole percent. You would expect that to be a lot worse considering where you are. Let's pull this thing up and get a good look at it. As we discussed our near-term, long-term, what we are looking for this week, next week, and all of 2023 on Sunday morning's live stream. If you missed that, make sure you catch that replay. For you channel members and Patreons out there. There's already been a trade on Bitcoin. Unfortunately, that's just the way these things work. I have no control over what Bitcoin does and when it does it. I just know when I get the signals to take the position and then take the profit. So unfortunately, I am not going to be able to help you find a trade. Maybe, who knows, at the open we might get another opportunity. My profit target was here. You can see right in there, that's an old support zone. That was clearly support. Tested there, broke out, closed above resistance, and then you took out the low of this candle right there. So that signaled a potential trap. Then you got your breakdown here. So on this pullback, right in there, that's where you should have been looking for entries. We took the entry today roughly in here on this candle's retest of this 30-minute resistance because it just didn't look like it was going to give us another chance to get in at 23,040. I am still in the position. My actual entry on the Bitget platform is 22995. You can see here coming in on the Coinbase data feed, you've got 22999. So $4 off of that level. My risk was simple. That wick right there was where I threw my stop above. This was my profit target. So if I set this up for you real quick, it will look like this. And you can see right there, it was a 3-to-1 risk to reward. All right. So once again, just using the risk to reward tool alone allows you to basically decide whether or not the trade is even worth taking. And just 5 minutes ago, someone in the Discord was kind of upset because they didn't get to take the trade and they were looking for it. And I said, well, this is the daily open. So, I mean, would I take the trade? No, because my job is done for the day. I've already made money and I'm out, right? Right here. But this is a supply zone. The reason why I wouldn't take this retest right here was because I've already A, made money, and B, it would feel too much like chasing price to me, right? So I don't know if he took the trade or not. I wouldn't advise taking it. I am looking for a deeper correction, but I mean, I don't know what it's going to do. I don't know that this trade would work either. I didn't know that trade would work. I never know when these trades will work. But we're doing pretty good on the week. So far, we took trade yesterday, made money. Took trade today, made money. So we're doing all right. Let me get back over here real quick. Just because I'm a very big believer in trust, but verify. And right here is that verification. So the trade was posted in the Discord before it happened. This is yesterday's trade. This is today's trade. You can see how my entry is that blue line right there as price pushed down into my profit target. It took me out of the trade by 70% of the position size. And then I just simply moved my stop down to break even. And as far as calling the trade out, remember, please do not sign up to the Discord thinking that it is a signal service, because it is not. 23077 is where supply is. 22,860 would be the bearish target. Remember, you're trying to short an extremely bullish asset. 30-minute res is 22,999. Watch 30-minute closes there. I mean, there it is, right? This is the number where I want you to watch. This is where I want you to take profits. Once that occurs, movie stop the brakes even and walk away from the computer. You are done for the day. That's how trading works, ladies and gentlemen. Unfortunately, once again, it would be nice if some of these I mean, I took one look at this chart this morning. It took me all of 3 minutes to decide if I was going to short it or long it and exactly where that would have taken place. We'll discuss all that in today's live stream, but we got a lot of other stuff to discuss as well. Like A, is there a recession coming? B, is that going to cause the stock market to do an '08 style crash? Is this a bull market a bear market rally? Is this a fake out move on Bitcoin and all of that stuff? All right, so hopefully you're prepared to sit back and listen to some ramblings of a madman today. How are you guys doing out there in YouTube land? Good morning, Johan. Good morning, Ray, Andrew, Edom, Darnell, Johan, Tonka, or Tanko, Tanko, I'm not quite sure. Bill, RK, Run Mountains, John, Big Boozer, Ray H, Edom, all of you. Thank you guys so much for being here. Thank you so much for your time, as your time is the most valuable asset in this world. And the fact that you are giving it to me means it's the entire world to me. So thank you very, very much for that. All right. So, like I said earlier, not a lot of stuff's going on today. We do have a little bit of stuff on tap for this week as far as economic calendar is concerned. On Thursday, we got GDP. Next week, we're going to have a FOMC meeting. Other than the GDP, there's not really much of anything else to discuss. Bitcoin on the weekly right now, looking like a puny little week compared to last week and the previous week. But that's normal. This is very, very normal price action. Today is Tuesday. So what we're assuming is the high of the week is probably in, and you're probably going to see a pullback. But that does not mean that's what's going to happen. It's just what we assume will happen. You can see this week, right, the week that we're currently on, wick has a perfect test of 23,180. That is weekly supply. That is going to be a difficult level, to say the least, to get over. If you couple that with the fact that the US dollar, which is the asset that Bitcoin is traded against, is at monthly support, then things start to look a little bit like Bitcoin may be witnessing a correction pretty soon. And that is great news for us bulls. Excuse me, I'm making a mess over here. Let me try to clean it up a bit. I got a brand new keyboard. I don't want ashes in it. There we go. That's good news for us bulls because it gives us an opportunity to look for places to get long, especially the people that missed the move. You shouldn't have missed the move because days before the move happened, I told everybody what I was doing, what I was going to do, and what I did was bought the yearly open. And the yearly open is where this thing took off from. So We bought the yearly open. You got in at 16,530-ish. Excuse me, 16,530 is the price of the yearly open. And today you are currently trading at $22,800. That's a pretty nice move off that yearly open. Enjoying second cup of coffee on the day. I only drink 1 to 2 cups of coffee, and then I'm pretty much switched to water for the rest of the day until I start drinking alcohol, which is never before 5. Because if I do it before 5, I think I'm an alcoholic. And if I wait till 5:01, I am not an alcoholic. Just a joke. I'm obviously an alcoholic. I drink every single day. All right, here we go. Good mornings, everybody. Please smash the like button. Says Edom. Yes, I would appreciate that. Thank you very much, Edom. I absolutely would appreciate that. As I guess it helps with the algo or whatnot. What truly helps with the algorithm is watch time. I don't think YouTube gives too much weight on likes and comments and stuff like that. They want people on the platform. They want to keep people on the platform. So that's what really helps. The watch time. All right. So, yeah, I mean, $20,000 was a big number for Bitcoin to get back above, as that used to be the old all-time high. This is more than just a bear market rally. I understand that people think that it is just a bear market rally because Bitcoin is in a downtrend, no matter how you slice it. But if you're looking at things in perspective, then that all changes, right? Like, it is very subjective for me to tell you that Bitcoin's in a downtrend or Bitcoin's in an uptrend. It just depends on from whence you are talking about, right? If I am talking about any time prior to Thursday, October the 1st, 2020, then Bitcoin is in an uptrend. If I am talking about the time frame from any time after Tuesday the 1st of June 2021, then obviously Bitcoin is in a downtrend. What I can tell you, and these are facts, okay? It's not objective, it's objectivity, not subjective, is that on the year, you're green, on the month, you're green, on the quarter, you're green. And 16,530 is the price that will change that. If you lose that price, then obviously you are no longer in an uptrend on the year. You will be in a downtrend then. Pretty much. That's how this works. You're also coming into monthly resistance up there. I wanted to mark that. This is your weekly supply zone. You've also got monthly res right there. So two big levels for Bitcoin to get above. This marks a beautiful spot to see Bitcoin come in with a correction. If we go on out to the quarterly chart, which, is one of my favorite charts to look at, you can see roughly around the midpoint of this bullish candle here, you have last month or last quarter Q4 2022's opening price. So since that makes this candle the midpoint, this is a legit breakout. I don't care how you look at it. It is legit. So watching 9/4/23 moving forward will be something that we can do. It's an area that we can watch. If price were to pull back into this region, I would be extremely excited to see how it reacts when it gets there. Obviously, I don't know if it's going to go down that far, and I don't know if it's going to stop if it does go down that far. It's just an objective place to start looking for entries as long as price is showing you that it is in fact support. And I don't mean on a 5-minute chart. It could take days to weeks before it actually finds support there or wherever, if it even finds support. There's a whole lot of on-chain data out there that suggests we've seen capitulation upon the FTX debacle. On this channel, we were discussing the fact that Bitcoin ultimately has been very correlated with risk assets for a very long time, almost since Bitcoin's inception. Has it been trading correlated to risk assets? On this breakdown, we lost that correlation as on the same very same week that you had the FTX collapse on the S&P 500, you had a very strong bullish candle. So that's when you lost that correlation. And basically, sometime in here, I was telling everybody to be very careful looking for shorts down here because I believe that risk on correlation will come back. There just isn't enough data out there that suggests that we're going to see a 2008 style crash. A 79% correction on Bitcoin is pretty much par for the course for this asset. Every 4 years it has a halving, then a big bullish cycle, and during the bear market cycle phase of Bitcoin, it pulls back 80%. Like, it's happened every single time. It's almost got a 100% hit rate for that. And this year was no different, or last year, sorry, because this is 2023. 2022 was no different. If you pull back, you can see there you 77% from high to low. That's a pretty drastic decrease in an overall assets value. So, I mean, that's close enough, right, to finding close to the bear market lows. On this channel, we have been bullish ever since this date, right here, when Bitcoin traded down into the MVRV Z-score undervalued region. That is when our bearish bias, overall macro bearish bias, changed. Once we got into this area, that is when I started telling all of my subscribers and followers that you need to stop looking for shorts and start looking for longs. The reason is simple, because on this indicator, in historical fashion, every single time Bitcoin has ever been in this region of price, it has called the bear market low every single time. It has a 100% hit rate. Now, obviously, we cannot use history to predict the future, but, you know, it does rhyme often. And a lot of people, especially people that like to invest money into Bitcoin, they look at data points like this. I mean, professional traders are usually selling into FOMO. They're not buying into FOMO. So whenever an asset is just absolutely rocking and rolling, they are typically selling. It is retail that is bringing in all that demand at those high prices. So up in here, you know, there was a ton of selling going on from the professionals. Down here, though, different story. If you take away the FTX debacle, I say Bitcoin's probably trading in the $20,000 to $24,000 price range, sideways, right? Sideways. I'd say that it would probably be trading about where it is now. So when I said be careful about looking for shorts down here, because when that risk correlation gets priced back into the market, you're going to see a very aggressive expansion to the upside. And that aggressive expansion to the upside isn't going to be a sell event. You want to be positioned long before that happens. And then boom, shakalaka, the beginning of 2023, which is typical for trends, you got that move, right? That repricing happened. You repriced yourself all the way back up to the FTX sell-off. If I bring this line up right there to the resistance level, that is your FTX sell-off. This is when it happened. So on this one single week, you basically repriced that correlation back in to the marketplace. If I pull up all four charts, I have the Dow Jones Industrial, the NASDAQ, and the S&P 500. Those are your three benchmarks. Give me 1 second here. All right, so that is basically the benchmarks to decide or to help investors with making a determination on what is really going on in the marketplace. On the NASDAQ and on the S&P 500, you are still trading under your downtrend. Wait a minute. I want NASDAQ up there. Just give me one moment. And I want Bitcoin over here. What just happened? Just give me a second here. I just woke up. Yeah, let's go there. Let's get it. NDQ. We'll use NDQ. Let's just use the futures. Screw it. There we go. So you can, I mean, you're still in that bearish trend on the NASDAQ, though. However, you are currently breaking out of it. You did trade above it briefly here, and then you set in this kind of like little bull trap. I said that I thought and I felt like it was very unlikely that the market would give you three identical bull traps, right? Like that would just be too simple. Ultimately, it did. I mean, that was a shortable event. And as long as you took profits on that short from trend line to support, you made money, man. That's a big move to the downside there. So it's not like you didn't make money, but you wanted to be a buyer. You want to be a buyer at support in an oversold market, especially in an oversold market. You can wait for at least bullish divergence to kick in or something like that before you start selling an oversold market, because the indicator is only showing you momentum. It's and which direction that momentum is headed. But typically on these assets, that's when the buyers show up, is after you've been oversold for a little while and you've had time to cool down. Why does the VIX keep shifting around the chart? There. NASDAQ, SPX, Dow Jones. All right, so what we were watching while everybody else was looking at this trend line here, wanting to get short the S&P 500, I assumed we were going to break out here. We didn't break out. We had a CPI print there, big news, FOMC the following day, and they used all of that and basically just liquidated the upside and downside of the market. But then for 2-3 weeks, you traded at support. That's not bearish at all. And like I said many times, if you fib this from low to high, you're going to see that where you pulled back to was the 50% range of this leg of price to the upside. So this was a perfect place to become a buyer. I think you're going to eventually see this break out. Once you break out above that, then you can basically say that your bear market has probably ran its course. Excuse me. There is your 21 exponential moving average. There is your 21 exponential moving average. Both of these are on the weekly. On your Dow Jones Industrial, you can see that you were trading well above all of your major moving averages. Not only were you trading, because the last couple of days we did get that pullback. And today, currently, you're going to open you've just opened under the 21. So it does look like the market's looking for another pullback day. But anything down at 33, 166, and even into 33,053, I think are areas to be a buyer on that asset. So we'll see how this ends up playing out. But if you look at all of your major moving averages, the 21 exponential, the 50 exponential, or the 55, I'm not exactly sure. It's the 50 or the 55, the 100 being the blue, the 200 being the purple, and then ultimately the red one is your simple moving average, the 200. You are structured bullishly. Now, moving averages are trending indicators. That is all they are. They show you where price is in relation to that average. It is not an indicator that we look to take trades off of. We just simply use them to help us identify trending scenarios. Okay? That is it. And this asset, while nobody even was paying attention to it or talking about it, everybody's still so bearish. This asset is structured as if it's in a bull market. Think about that for a second. This asset has structured itself with all of this time here as if it's in a bull market. The 21 is above the 50 is above the 100, and now the 100 is above the 200. That is a bullish market structure, not bearish. But remember, it's the only one. Everything else still looks mighty bearish out there. If we pull up the same averages on the S&P 500, there you go there. You can see on the weekly, it's starting to shape up, but you're still under. The 21 needs to be above the green line. You got time to go. Over here on the daily, this is what it looks like. Both the 200s, the EMA, and the simple moving average are both still yet structured above your 21. But your 21 is coming up, and it's coming up quick. But in order for the S&P 500 to look like the Dow Jones, you're going to have a lot more time, and you're going to have to stay above 38, 42, 80. All right, 38, 42, 80. So to make things simpler for you guys, because that's what this channel is about, it's to show you how I analyze price, teach you to simplify your analysis. Because if you can simplify the charts, then you can make better trading decisions. Now, once you learn how to identify trend, once you've learned all of that, Then you focus on the objective price levels that I taught you, that I teach you. Those are the areas where you're looking for entries. Sometimes they will work and sometimes they will not. That's trading. But if you do it, then you can start to see, if you do everything the way that I do it, you'll start to see consistency. And then once you get that consistency in place, you now have a foundation to build on. But first, you got to get consistent. The two most common words used in the trading industry is consistently profitable. But the first word in that two-word phrase is consistently. So you must get consistent first. Consistency comes from the way you enter and exit trades, and also how do you analyze the price, how you analyze the charts. Because if you're thinking that you're in a bear market, what are you going to be doing? You're going to be looking for shorts, right? Naturally, that's what people do. We short off resistance in the bear markets. We buy off support in the bull markets. But you got to know what you're in before you can even start to do that. So, simplify your analysis, ladies and gentlemen. Yearly chart right now, you're bullish. Monthly, quarterly, you're bullish. All right? So look for bullish entries. If you get back down under the yearly opening range on all assets, this type of analysis does not only work for Bitcoin, it works across the board. All assets, Bitcoin, Forex, stocks, because the same professionals that are trading Bitcoin are also trading Forex and stocks, right? Most of them also trade bonds and futures. I do not trade futures or bonds. I stick to Forex, stocks, Bitcoin, and some alts, right? Because to me, that's all I need to focus on in order to make a decent living. So yeah, right there is going to be your yearly open. It is the first day of the year since Bitcoin, spot price of Bitcoin trades 24/7. That means it never closes. So on the very first day of the year, you opened at 16,531. As long as you are trading above that price, you should be looking to buy support, not sell resistance. If you are still bearish, I don't know why you would be bearish, but if you are still bearish, then you're looking for resistance levels to sell. Well, you're at one right now, right? So you might get lucky and you might make a little bit of money by shorting up in here. I would much rather you short up in here than down there. I can tell you that. But I don't want you shorting. I would much rather you wait, sit on your hands, wait for support to reveal itself, and then buy that joker, because you're going to have much more success in an uptrend by buying off support than you ever will selling the moves up, right? The short, ladies and gentlemen, was during 2022. That's when you should have been looking to sell resistance. 2022. 2022 is now set in stone. It is now the past. You are in a brand new year. That means investors are looking at brand new data. They're making brand new decisions. They are allocating capital elsewhere. They did not buy the VIX. We noticed that right off the rip. Everybody's waiting for that blow off top on the VIX before they're going to say this bear market is over. They're looking for something that happened like back in 2020 and in other similar bear markets. That's what they want to see in order for them to become bullish. But what they failed to see was investors, because this asset right here is traded both the underlying product as well as options. You can trade options on the VIX. They were not allocating their capital here. They were allocating their capital in the only asset that was bullish in 2022. This right there. That right there is where all the money went. So naturally, we've been watching the dollar very strongly for that reversal to take place. And we nailed the top of this thing. We nailed the bottom of Bitcoin. We nailed the top of this. So you gotta be on top of the game. You gotta be able to focus. Where is money going? Where is the money going? Follow the money. And the way you do that is by watching assets like this. You also had energy. You also had energy moving to the upside as well in 2022. So that's where everybody had their money. Right now, oil looks like it is positioning itself to go up. Here you go. There's your yearly open 2022 for the entire trending, or for the entire year almost. In 2022, you were bullish. It wasn't until Q4 before you got right back all the way back down to the yearly opening range. When you got there, you got to bounce, then ultimately you dropped under it. So you got two yearly levels right here, around 75, 35, 81, 65. So as long as oil is trading above 2023's yearly opening price, which is 81.66, I will have a bullish bias on oil. If we get under 81.66, I will be looking to sell any rips back up in that direction. Right? So oil is looking okay. I think you know what I mean? It looks like it maybe wants to go a little bit higher. I already think the S&P 500 and all those assets, NASDAQ, Dow Jones, all of those things are going to find support pretty damn soon. Start moving higher. Now, it does not necessarily mean that I am looking for tech to go back up, right? The tech sector is the growth sector. That's the sector where everybody makes their money, because it usually is moving one direction and it's straight up. But you can see the trends here starting to shift. Anytime you see a yellow line on my chart, that is going to mark the yearly open. Right here on AMD, you're above yearly open. I mean, you can go across the board and you can see this almost every single asset. Ford, not really tech, I know. BAC, it's Bank of America, not tech, I know. There's a few on here that's not tech, but you get my point, right? My point was made. So, let's see where Bitcoin is real quick. Just give me a second here. Let me just pull it up on the other monitor. All right, so because if there is a trade to be made, I don't want you guys to miss it. All right, so just focus on your daily open, and that is also objective resistance, 22,920. That is yesterday's close. Until you close the candle above it, that will be resistance. I mean a daily candle, not these hourlies. But you can clearly see how there's trading going on here. Also, this is kind of like the first time since Bitcoin's been up at these prices where you had the point of control situate itself pretty much at the top of the range early. So that was a huge indicator to me that I was probably looking for shorts this morning on the asset. I'm not looking to hold that short for any amount of time. I will hold the remainder of the position short because I'm being paid in Tether on this specific trade. But on my Bitcoin and USDC, both of those accounts are long and strong. All right. One of the beautiful things that I love about Bitget. All right. So, if you were looking for shorts on the S&P, on Bitcoin today, I would want to try to get that entry as high as possible, like roughly resistance. You can see where a whole new trading range is starting to take place here. And the top of that trading range is going to be 22,969, which is just a couple dollars away from 23 grand. 23 grand is a big figure number. As far as profit targets go, like I said, your support is there, and it's still there at 22,857 because you still have not closed an hourly candle under that price. So that's going to be your operating range. If you start closing hourly strong above the daily open, then you're probably going back up to test that support at around 23,044. All right. Hey, the name calls make people like you even more. Shows your appreciation for the time. Thanks goes both ways. Yep. I appreciate every single one of you. Every single one of you. Thank you so much. But yeah, unfortunately, man, I swear I wish this would happen every single day to where price would just simply wait for me to go live, get you guys all in here, let me call out the trade for you, let me give you the areas to look for entry, where you put your stop, where you take your profits. But it just doesn't work out all the time, right? Fortunately, today the trade has already been taken. The money's already been made. So I do, like I said, I do believe you could see either this day, inside day, remain an inside day, or you could potentially look as low as yesterday's low. Now, I don't know if you're going to get all the way down there. That's not a high likelihood. Depending on, where price is trading now, yes, you could ultimately continue to rotate lower if volume keeps shifting price down, but yesterday's low is pretty far away, right? That would be a far away target. You want to be trading inside of today's range. That's where the high probability move is, inside of this stuff. When you're trying to pick targets that previous days, that doesn't really jive too well. However, it can happen. Naturally, it can happen because it does happen, right? On this day here, it was a short, and on this day here, ultimately, it took out the previous day's low. But since you've done that, you've only made higher lows also. So something to keep of note is on the 3-day, you are still trending higher. There's a high, there's a higher high. So you have not made a higher high on today's candle yet either. So all of this could very well be setting up as a bear trap. Yesterday we got that move lower. We took the trade to the upside. We made money on the push up. And then ultimately this happened not even 5 minutes after we took profits. This is what I coined the term random market violence from, because it is, right? You're in a trade, it's working out so great. You see price just blasting off away from your entry. You're making all this money, and then it completely reverses and comes all the way back to your entry, and then gets all the way down to your stop loss. And it's just heart-wrenching. This is why this strategy is the best strategy that you're going to find for free on the internet, because you would have taken profits and moved your stop to break even to get your risk out of the marketplace. So that way, when the random market violence happens, you're good. You still got paid. After all, that's what you're trying to do, right? You're trying to make money consistently. You're trying to put a little bit of money in, take a little bit of money out, and then let the market do whatever the market's going to do. But for the last 3 days, you have been making higher highs and higher lows, except for today. So we do know that it's either going to make a lower low or a higher high. It doesn't have to today, though, because inside candles are a thing, right? They are a thing. So we'll see how it plays out today. Today's just Tuesday, so I don't think the market's going to be very silent waiting for GDP. I think the market is pretty much already underway, or already pretty much knows what's going to happen with that. So let's go over a couple of data points real quick, because I know you guys love data and data points, as they can be very helpful. Now all of this data that I'm about to show you, all of this came from a channel called Giavaco Capital. If you are not familiar with that person, you should be, because he is a very good macro analyst investor slash money manager, and they have pretty good takes sometimes. Sometimes I wholeheartedly disagree with them, but as far as a macro analyst goes, you should follow them. He has a YouTube channel and a Twitter account. Follow them both, because he puts out really good, valuable information. Then you can have someone on the sell side, like 42 Macro, right? If you're going to follow bearish people, make sure you also follow bullish people, because you're trying to make a decision based off what knowledge you have. And if you let, those professional analysts get the data that to suit their narrative or whatever, if you get both cases, then you can weigh the data yourself out and make some really good or better decisions, instead of just focusing on the buy side or the sell side. All right, first and foremost, I want to pull this up. This is very important. Economist who invented the yield curve recession indicator, this guy right here, basically says, because that's what a lot of people are focused on, that yield curve inversion. That is what, like, one channel in specific keeps bringing up, the yield curve inversion, the yield curve inversion. That's why we know the world is going to end, because of the yield curve inversion. Well, the guy who invented it, the yield curve recession indicator, it's different this time, right? Wrong this year. In other words, he himself is saying that the indicator he invented for the yield curve inversion may be showing a false signal. That's important, right? I haven't heard anybody discuss this or even talk about it remotely. This came out on the 4th of January. This is the 24th, so obviously I'm 20 days late. This could have been news all over Twitter for a couple of days, but I never seen this trending, and I never seen it once on any of the people that I follow. Nobody discussed this, especially if they're on the sell side, because this would completely destroy their theory if they're still on the sell side and they're using the yield curve inversion basically to stay on the sell side, when the guy who invented the indicator itself is saying, yo, I think my crap is broken this year, bro. You should probably take note at the very least. Now, these people right here, NBER, National Bureau of Economic Research, these people are very, very important, all right? Because they basically look at a few things to decide whether or not an economy is in a broader recession or not. The NBR's definition emphasizes that a recession involves a significant decline in economic activity that is spread across the economy and lasts more than a few months. Because a recession must influence the economy broadly and not be confined to one sector, the committee emphasizes economy-wide measures of economic activity. The determination of the months of peak and troughs is based on a range of monthly measures of aggregate real economic activity published by the federal statistical agencies. These include real personal income less transfers. Number 2, non-farm payrolls. Number 3, employment as measured by the household survey. Number 4, real personal consumption expenditures. 5, wholesale retail sales adjusted for price changes. And 6, industrial production. So those are the 6 things that they focus their attention on when looking at potential broader economic downfalls. So, like, for instance, '08 types of crashes, nobody wants to see that except for people who are short. Nobody wants to see an '08 style crash. People do not realize just how close the world was to collapse then, right? That's why there is a whole lot more money on the balance sheet for the Fed and everything else. Had they not stepped in and done something fast, yeah, it would be much different today than what it is. But anyways, I bring this up because I have some interesting stuff to look at. So let's keep this in mind. We're going to look at real person income, less transfers, non-farm payroll, employment. Employment is measured by a household survey, real personal consumption expenditures, wholesale retail sales adjusted for price changes, and industrial production. Let's go. Let's go. You ready for this? All right, good. But I'm not going to go through everything. I'm just going to show you something, and we're going to do this side-by-side comparisons. Here you go, side-by-side. Real personal income excluding current transfer receipts. All right, so this was August 08. You can see that, clearly there was difference here in the way this chart looked compared to the way this chart looks today. This is the latest that we have from 2022, right? We'll get the numbers again. You'll get another tick. Now, this is not to predict what I think is going to happen in the future. Please let me rephrase that one more time. I am not saying that I'm showing you this to predict anything in the future. I am merely pointing out to you the reason why I have been adamant on this channel for so long that there is not an '08 style bear market coming. All right. Nothing looks the same way that it did back then as today, or as all of 2022. Remember, 2022 has come and gone, and that was the year of the bear market. We are in a brand new year. Brand new data is going to come out. Brand new everything's going to happen. So I'm talking last year, 2022. All of it doesn't look anything like that. Real personal income, excluding current transfer receipts. There's the clear trend line from there to there, there to there. Now, this could start to eventually look like this, right? Ultimately, later on down the road, 6 to 8 months from now, a year from now, this could start rolling over and then start to look like that. But as far as the '08 style crash coming in 2023, probably not going to happen. This one's my favorite. Non-farm payrolls. Just look at this obvious trend. Non-farm payrolls. Remember, that's August '08. All right. Let's move this out the way real quick. Let's pull up SPX and let's go back to the '08s. Now, if an '08 style crash does happen, we will be ready on this channel. We will make money off that short, right? I do not care. I will short any asset to zero if that's what it wants to do. I trade price. I watch price alone. And if price tells me that it's wanting to go lower, then I will damn sure go with it. We stay on the right side of the market on this channel. But August '08 puts you in here. So, you know what I'm saying? You are in the bear market already. And that's when you got, that nasty, nasty dump. They don't look anything alike, man. Non-farm payrolls. This data was released in January 23. So even all of 2022, you're not losing. I mean, the trend is clearly different. That's from 8/31/07 to 8/31/08. There's a clear trend there, right? Clear and obvious trend. You are trending lower. Our jobs, our data, all through 2022 bear market, trending higher, guys. Trending higher. Employment level household survey, same thing. 2008. What is 2008? Are you drunk? Trade Talk must be drunk again. See the trend? Clearly different here, guys, right? This is the stuff that caused the '08 style crash. Here you go for all of 2022. Doesn't look anything like that. Remember, these are data points that Inbar looks at, right? Not me, them. Real personal consumption expenditures prior to '08 crash. You had an obvious and clear downtrend over here all of 2022 for the what crash we had, or bear market, whatever you want to call whatever 2022 was, right? Nothing alike. Nothing alike. And let's see, what do we got? We got manufacturing and industrial to look at, and then we're done, right? We're done. Now, this one here, you could arguably say, because that was a pretty nasty dip there, right? But now with the latest data, this is where we currently are. Obviously, from here to here, those 2 points still indicate an upsloping trend. But this one could have arguably been. You could have arguably made this one look like this if you wanted to, right? If you was looking for the '08 style bear market. So, I mean, and then finally, let's do this one and we'll be done with this stuff right there. Clear and obvious downtrend. This is '08. So it's, once again, it's before the '08 crash. 2022. All of it. Now, this one, once again, one could make an argument that if we do start to see lower prices, then this could be the cause. So, but, throughout what we've already seen occur on the charts, you're still trending higher, whereas back in '08, you were going lower. Once again, I got all of that data from Chiavaco Capital. Go give them a follow, man. Give them a sub. I'm telling you, if you get into analyzing that type of data, because I specialize in price. That's what I do here, right? I specialize in price. What I'm doing, what my channel focuses on, is teaching you how to find sniper style, razor sharp entries intraday, intra-week, intra-month, intra-quarter, and intra-year. I'm teaching you how to get the best entries, better entries than, say, Chiavaco Capital is going to get, right? Because they wait on a lot of data to happen, to play out, before they'll even start making any financial decisions, whereas we simply watch price, because we are firm believers that price is the only leading indicator in the world, and it will tell you what's going to happen before it happens. Like, the market will price in what the Fed is going to do before the Fed even knows what the Fed is going to do. So think about that for a second. The Fed makes its monetary policy decisions. It doesn't know, right? It goes from month to month, looking at all these data points to make financial decisions, and price basically tells them what they're going to do. So that's why I don't focus on the news, care about the news. You can show me all that data you want. I don't need it. I'm going to nail my entries no matter what is going on in the world. I love Bitcoin because of the value it provides as a place to store your money. I love Bitcoin because of the outsized returns that it produces. Do you realize that if you're still sitting on the sidelines on Bitcoin, you have missed a 50% move from the lows? And we did bottom tick Bitcoin. It's recorded. It's live. It happened live. Here you go. You have missed a 51% rally on Bitcoin. 51%. So essentially, I took the position on this day. This is the weekly, sorry. Right here. What day is that? It's Sunday, the 1st, January. I'm still holding to those accounts levered up long. This year, if I quit trading right now, the amount of money that I've outperformed the S&P 500 vastly, like massively, by hundreds of X's. All right? That's what I'm trying to do for you, is teach you how to do that. You don't need to wait on all that data to show up. You don't need to wait on any of your favorite YouTubers or Twitter guys to tell you what their opinions are. You're going to learn how to do that yourself right here. All right? Perfect. So with that being said, Bitcoin really hasn't done much of anything since I've been running my gullet with all those data points. You can see here last hour printed as a doji. This hour, you got 34 minutes left on it. Still currently printing as a doji, but also second attempt at the daily open. And this is a supply candle because it is the last up close candle in this sequence of price. So this is your supply. That is where people, were buyers. This is where people were either taking profits or putting on new positions. We know that because it closed up, right? Then you had this right after. So if you can close an hourly above that, in it or above it, then I wouldn't mess around with it. But you can clearly see these are your last 3 days as lows. That is what you're having trouble breaking down through. So if you do break down through this, you could potentially see yesterday's low get taken out. So 22,920 could still potentially be a decent spot to look for trades. All right, so this blue box keeps popping up on my thing. So let me go ahead and get this out of the way. I do have an affiliate link. I use Bitget. This will not apply to US users, unfortunately. Thanks to SBF and FTX and Alameda Research, Bitget has decided to stop taking US customers because it's just simply too hard to keep up with US regulations, especially now. For instance, the US was only going to allow Bitget to give you 2x leverage and only allow you to trade 4 pairs on the futures side, right? Four assets and only 2x leverage. So instead of doing that, they decided to just say, you know what? We're just getting the hell out of the US. However, if you have already signed up using my referral code and link, you are still good. You can still operate the normal as if nothing changed or happened. But anybody else in the world, not in the US, if you want to trade on the cheapest platform there is out there, as far as fees goes, Bitget is that platform. That's why I use them. That's why I signed up to do this. That's why they are my main brokerage in my exchange, is because of the cheapest fees. They allow you to trade up to 125x leverage. They have a broad amount of futures assets that you can trade. You can do it with Tether. You can do it with USDC. Or my favorite, you can use the inverse swap contract, which allows you to trade Bitcoin to make Bitcoin. And that is a beautiful thing. That in itself, that allows you to hedge your long Bitcoin holdings by simply accumulating more Bitcoin by trading Bitcoin. What a wonderful world we live in today. Technology is fantastic. I love it. I have a fantastic office set up at my home. That is my desk. That's the trading desk. That's where I'm currently sitting right now. And when the stream is over, I will power this stuff down, and who knows what I'm going to do. But there is a link in the description. If you do deposit funds on that exchange, please make sure you use code XTSC. That is X-Ray Tango Sierra Charlie. Those 4 little letters, XTSC. I would be greatly appreciative of that, as like I said, it is an affiliate link. So thank you for that. Now, hopefully this blue box will stop popping up. It's on YouTube also. It's not even like I'm not under no contracts or anything with Bitget. They don't tell me to do it. I don't have to do anything at all. It's YouTube that keeps telling me to show my products, I guess. That's so weird. That's pretty much it. I don't have any products to show. All right. So Bitcoin's still playing around that level. Man, it would be hard for me to take that trade. It was easier to take it up here, right? Because there was a much better risk to reward. Because this was where I was targeting. Because that was support, right? So it was much easier to look for this entries up in here and then take profit down there versus getting short here to only potentially see it go there. Because you haven't broken down yet. What's to say that it won't come down here? And, nothing. You can see that you've gotten 4 tests of that support. This is a support zone or a support area. The problem is it's yesterday's support, not today's. And when you're a day trader, you look to operate inside of that daily range. You're not looking for targets and supports from the previous day's range. All right. Let me answer a few of these questions. Once you hear, sit back and listen. It's time to learn. Yeah, you will learn here, I promise. What is your life goal? My life's goal is to help as many people as I can, to be as honest as I can, and to be happy as I can, right? Like, I think those are 3 pretty good goals to have in life. It's what most people want, happiness. I don't really care if I'm rich or not rich, a billionaire or not. Like, money is to me is more of a tool than anything. It's I have to have it in order to buy things that I need to survive, but I'm not like stingy or greedy with it. Like, for instance, I drive an old vehicle. I don't drive a brand new Lamborghini. You're not going to find a brand new Lamborghini in my driveway. Is it because I can't afford it? No. It's because who the hell would pay that kind of money for a damn car? A car, bro. 18-year-old boy trying to impress a girl, maybe. Yeah, all right. He has the legit reason. I'm 42 and I have a girl, so what do I need a Lambo for, right? To go fast? Where I live, the speed limit's 35 miles per hour. Most of my trading profits would just go to be paying speeding tickets. with a Lambo. No, I have a vehicle that I can personally go outside and work on if I need to, right? I don't have to call some Italian dealership in Italy and have them send me a $4,000 sensor because I have a low air light sensor on in my dash, right? I guess what you could say is I use my head. I have common sense. So my life goals are simple, right? Do as much as I can to help others. Kind of keeps the karma on the right side, if you will. Stuff like that. That's why I do this stuff for free for you guys, right? It's not for the money. I make $200 a month on YouTube. $200 a month. And I just got a big email from them saying that they're going to take more. Like they already take 55% of your favorite creators' pay. And now they're going to take more. It's like, damn. All right. I'm glad I don't rely on YouTube to make a living. That would suck. What's your life's goal? Right? What is your life's goal? That's what matters, Adam. Set your goals to where they can be achieved, though. Don't set goals that are unachievable. Make sure you set goals that are achievable. That way you can raise the bar on those goals. Start, like whether you're trying to quit smoking, whether you're trying to gain 30 pounds of muscle, whether you're trying to make $1 million, whatever your goal is, make sure you set an achievable, obtainable goal so that way you can smash that goal and set a new goal and then smash that goal as well. Because smashing goals is always fun. I don't care who you are. If you've got a goal set, once you smash that goal, man, it feels good. Then you can raise the bar a little bit on the next goal and smash that one too. I guess the older I get, the less goals I have. Really, I've achieved a lot of the goals that I had early on. Same with the Uber. What as far as taking everybody's money? Shop Nike halted at open. LOL. WTF happened? Well, I don't know. Are they back up and running? Well, here, let's do this. The Shopify's trading. I don't know. Let's check out Nike. I don't know what you're talking about there, bub. Yeah, Nike was halted for a minute. Looks, you see this tick all the way down here? That's what happened. Probably a glitch in the matrix, so they halted it so nobody get hurt. That's a big ass move. You're looking at a $20 or $10 drop on Nike, and in a second that would crush a lot of people. I didn't see that on shop, but and then in Palantir, I don't even know Palantir's ticker. What is it again? PLTR. I don't know why. There's a couple of people that talk about this thing all the time on YouTube, but I don't know why. Its chart looks garbage to me. Must have had earnings this week. That's a big weekly. Palantir's trading under its IPO, but trading above the yearly open for now. Massive gap down today. That's why a 10% move in less than a specific amount of time will cause a circuit breaker halt. Where did you learn to trade? I learned to trade by doing what I'm doing now, staring at charts, right? Staring at charts. I started out the same way as everybody. I wanted to learn how to be my own investor, manage my own money, because money firms and stuff like that, like, they don't really do a very good job of managing your money. For instance, like if you have a 401k or something, depending on who you have managing that money will determine what they're doing. Some funds have proprietary algorithms that they just, whatever money you invest with them, like a percentage of your earnings or whatever, goes automatically to them. They just automatically deposit that money straight into their algorithm and it does the rest. But most places are simply just going to set you long in the S&P 500, right? And they're going to charge you a shitload of money for that. They're going to charge you fees out the ass. Penalties. Like, for instance, if you have, like, let's just use a random number, for instance. Say you have 50 grand in your portfolio, in your 401k, and you need to liquidate $11,000 for something very important. They're going to take half of your money just for you to liquidate that position. Half, dude, half. Like half. 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 And they're allowed to get away with that because that's the rules the government has set forth. And they don't even have to make you money. Like, you can lose money year over year over year as long as you're invested in a fund, as long as they have a license. And all they have to do is pay $500 a year to have that license. Naturally, there's some tests they got to take and stuff like that. But once they pass those tests, anybody can be a financial advisor. You just got to pay the $500 a year fee to have the license sent to you. And that's it. A reasonable expectation of trying to earn you capital. That's it. If they give you that, whether you make money or not, it doesn't guarantee you're going to make money by putting your money in a fund. So I decided I want to be able to handle my own money. If I needed to liquidate right now $11,000 because of whatever random thing that I was just discussing, I can do it by the snap of a finger. All I have to do is liquidate one position, right? Just close it. All I have to do is close one of my positions, and I could liquidate that one position, and I would have $11,000 easily. Boom, done. No fees at all. Nothing. Right? Transfer that money into my checking account. Boom, I am liquid cash. So I started staring at charts, started reading books, started watching videos, because back when I started to trade, there wasn't a whole lot of videos on the internet for trading. I'd say your trading videos really started to explode around 6 6 years ago. That's when you really just started seeing them. Everybody was a professional trader all of a sudden because but I mean, I'm sure there's channels older than 11 years that's been trading for that long, but just like anybody else, I just wanted to learn how to manage my own finances and to one day be able to hopefully become consistently profitable enough to where I did not have to work for somebody else. That was my main goal, was to be able to be my own boss. And also, when you look at the wealthiest people in the world, man, they don't work for money. They let their money work for them, right? And doesn't that just sound easier? When you go to bed and you wake up and you made money. Like, who the hell wouldn't want to be able to do that? So that's why I started to learn how to do it. And then over the years, I developed an edge. And I quickly began to realize that most of what's spewed out on the internet is horse badunk. It's garbage. It's not true. It doesn't work. Most of it isn't back tested consistency or profitable. For instance, just buying like just a simple moving average strategy, right? Buying 21 tests. That strategy may be consistent in a bull market, depending on the time frame, obviously, that you're looking at as well. But it isn't going to be a consistently profitable strategy in a bear market or even in a choppy market, right? In a choppy market, buying the 21 is going to get you killed. So I just started watching price. And I started to see consistencies. I started to see things. They all started to shape up. Losing and over trading and all the things that a person has to work on to make themselves a better person, like self-control, all that patience, most of that stuff is all that is needed in order to be a consistently profitable trader, especially in a bull market. In a bull market, all you literally have to do is buy the dip. I mean, that is it. It is so simple to make money when the market is going up only. Everybody makes money in a bull market. If you are invested, you will make money, right? It's that simple. So, but I wanted to be able to do it consistently week to week. I wanted to earn enough money on a week to week basis to essentially, work for myself. That's what everybody's goal is when they're trying to get into day trading. But it's just, the same reason everybody else does. Day by day, seems like chart patterns are not working as it used to. Only thing best now understand is price action, and you are the best at that. Yeah, no, candlestick patterns and stuff like that, guys, that stuff's never worked. Never. Like, you see it work in hindsight, but listen, and also, like, just the fact that if you can call a directional bias for the day, that still does not mean that you're going to be able to translate it into P&L growth, right? There's many days where I have the right direction, but lost money because of order placement. That's huge, right? Where I think the day is going to close red, and then the day closes out red. You should have made money, right? Wrong. It just depends on when and where you took the entry. That's going to dictate whether or not knowing or having the correct daily bias is going to generate equity growth. Just because you know what I'm saying? That's what I'm here to teach you, is knowing when and where to do that. That way, I mean, and you're still going to get trades wrong. You're still going to get stopped out. I don't know if it was this Saturday. One day last week, I think, I took a short position on Bitcoin, ended up getting stopped out, and one of the Discord members decided to wait for the liquidation break strategy. And I was like, yeah, I don't think that's going to work because A, it's in the weekend, and B, this and that. And it was Run Mountains, and that actually ended up being the trade. So I got stopped out, and they made money. You see what I'm saying? The directional bias was correct, but the placement of the position was not. And it's impossible to know that, right? It's impossible to know that. There's no way I could have known that had I just waited on the liquidation, then took the short position, I would have made money. Because you don't even know if you're going to get the liquidation. And then once again, waiting on the liquidation always, and then taking the complete and total opposite side of the trend is very risky. He made money on this day here, right? But if he tried to do the same thing on this day right here, he got wrecked. That's why we build rules. That's why we have a system in place. It stops us from, it's supposed to stop you from over trading and doing a lot of the things that causes retail to be not profitable in the first place, right? A lot of retail traders are like almost there. They just can't quite get there because either they're over trading or they're doing something just a little bit wrong. They're so close that literally if they just do a couple of the things that I say to do would fix their problem like that. And then they can be consistently profitable. And just please understand that it's a process. You're not going to get rich overnight doing this. It's not going to happen. Can you make a lot of money trading? Absolutely you can. Like that, like I said, that short position right now that I got on the dollar, I've already taken profits on that trade. And the amount of money that I made on that trade is more than most Americans that work or have minimum wage jobs makes in an entire year. And I'm still sitting on unrealized profits from that because it's just been going lower and lower and lower. You see what I'm saying? So like, you can literally make your entire year off of one trade. as long as the rest of the year you don't give it back. That's another thing retail has problems with. They can make money in the market. It's simple to make money in the market. It's a 50-50 chance, dude. Right? 50-50 shot. It's either going to go up or it's going to go down. Half, 50-50. So, yeah, making money in the markets is easy. Keeping it, putting it in your bank account, and doing that consistently, that's a different ballgame altogether. There's a lot to it. If it were easy, man, everybody would be doing it. That's why I think it's funny that people have built full-on businesses claiming to teach people how to trade when you cannot guarantee anybody's success in this game, right? But scam artists have been doing that just for as long as I can remember. Watching late night TV when I was in my teens, I can remember guys sitting on, big yachts talking about flipping houses or buying products and shipping them somewhere, or just like all these different scammers. That's how they make their money, by getting you to buy their product. They're just salesmen. They're not, their product doesn't even work. It's not going to help you. It's just going to give them your money. Like, they're just converting you into a sale, essentially. Bitcoin's back to being green on the day. Here you go. So you got to be careful on this. Remember, the downside trade had already been made. A lot of this strategy is also what it's really good for is sometimes you can make money and be on the wrong side of the trade too. Like, just because I shorted it today, it doesn't mean it's going to keep going lower. The trade could have been wait for a fresh low a day and get long like we did yesterday. So here's this again, real quick. Just this a teachable moment here. So this is yesterday. The blue is the entry, the red is the stop, right? And you can see that white line right there. That was the level that I told people to watch on the Twitter post. So all I did was wait for price to come back down to the level, and then I hit the buy button, right? Threw my stop loss under that low. And then within 10 or 15 minutes, because this is a 5-minute chart, price spiked up, created a fresh daily high. As soon as that happened, that white line was where I took profits, moved my stop to break even. So let's go find that intraday yesterday. What was it? I don't remember the level. 22,714. That was right here. But let's mark this 22,714. There we go. So this is that trade, man. Right? And this is random market violence. So when price traded back down into the level I said to watch, that was where I took my entry hit the buy button, threw my stop under this wick here. Take profit was somewhere in there. I took profits. I'm going to stop to break even. We got up there, and I'm thinking to myself, wow, today's going to be an easy day. I might even make money twice on this trade. If it continues to go up, if it breaks out, continues to go up, I'll get paid again on the unrealized P&L because I always leave a small piece on to catch potential continuation because I don't know what's going to happen in the future. And then in one 5-minute candle, price dropped all the way back down, creating a new low of day. This was your low of day. That was the London session. That was the low of day. And that's typically a bearish signal. When you make a fresh daily high, that's not even the same day. So this would have been your high of day here yesterday. So I bought there close to the low of day, sold close to the high of day, moved my stop to break even, and then this thing happens. Just straight down, boom, and sets a brand new low of day. I would have bet almost anything that this area here, price would have rolled over. As when you make a fresh high of day and then instantly go back down and make a fresh daily low, that's usually a very bearish signal. Usually. But what happened? It went back up and made a new freaking high a day. This whole day yesterday was random market violence. It's impossible to know that that is all that is going to happen. What my strategy does is it gives you an edge to operate inside of that craziness. Sometimes you're going to make money, sometimes you're not. So you have to learn sound risk management. So that way, on the days that you're wrong and you don't make money, you don't like blow your account because you keep trying to do the same trade over and over and over again. I had a huge problem with that in the beginning because my brain had a bias. I thought price was going to go up. So every time a new low was made, I would buy it and set my stop under it. And then price would go up just a little bit and then come back down to stop me out. So I would buy it again because I'm like, well, maybe now it's going to go up. It was just coming back to stop me and everybody else out. Now it's going to go up. Right? Now it's going to go up. Like that was one of the hardest things for me to break. So I made an easy, quick, simple rule. If I lose a trade, I'm done for the day. One, because the goal is to close out the week up every single week. It doesn't matter if I'm up by 0.02%. As long as the P&L closes higher than it opened up the week with, then I successfully completed that task. Now, the more trades you take throughout that week are going to significantly reduce the chances of that happening. If you're taking 5, 6, 8 trades a day, you are most certainly not going to remain consistently profitable. Now, it just depends on the strategy and a few other factors, but that's the way it was for me. Let's say it like that. because I've watched Ross Cameron. Everybody knows who Ross Cameron is. I watched that man make thousands of dollars every single day. You know what I'm saying? Every single day, just buying new 1 minute highs. Like, who the hell does that? But he is so quick on the keyboard. He is literally just scalping with massive size. So he's literally buying 50,000 shares. So that way a 10-cent move makes $2,000. But it goes the other way and he loses $2,000, right? But he's so quick with the way he does it, and he's got experience doing it. He makes it look easy. Not to mention, the man is a $100 million heir just because he charges $10,000 for the course and has how many members? 20, 30,000 people? Do the math. He can afford to lose $2,000 a day in the market. He can afford to lose that money, risk it every time, and afford to lose it every time, because he is just trying to convert each one of you into a sale. And then he also charges $300 a month. You see what I'm saying? For chat. Like, he can afford to throw that type of risk out there in the market every day. He has a solid strategy, but I can't do what he does and be profitable. I tried. It doesn't work for me, right? It just doesn't work. I could never make that work. I just built my own thing. So I can't promise you that you're ever going to be able to do what I do. But I can show you where the areas that I'm looking at and what I'm basically doing. And then you can, over time, go in and do what you need to do, make subtle changes here, maybe a subtle change there, set your own rules, right? And over time, build it into something for yourself. Because if you can do that, if you can consistently make that P&L green every single week, you will change your life. It will. Money no longer becomes an issue for you. And then once again, when you nail those monster trades, because you will, as long as your risk is minimal, man, you're going to get into some really good trades, especially on the liquidation break days. You're going to nail tops occasionally and bottoms occasionally. And when you do that, the unrealized P&L that you left on the table becomes significant. Like, way more than you made on the original trade to begin with. I say that often. Usually, once I get that, like, if I hit that really big trade, then the rest of the year I'm golden, because I am a very humble guy. And since I drive a cheap beater and I'm not spending outside of my means and all this other stuff, like, I don't work for nobody but myself, right? If you need to come up with, like, so that was also easier for me to do it. I don't know your life circumstances. I don't know what you got going on. If you have to make like $10,000 a week just to pay your bills, it's going to be difficult for you, right? To do that. Can you make $10,000 a week trading? Yeah, absolutely. But you're going to have to have a lot of capital. in order to do that. But you can build it up quickly. And then for you that, like, say, I don't have good money, I don't make good money to trade with, I'll never be able to even afford to be a trader. Yes, you can, because you can trade other people's money. You can go the route of either being a financial advisor, or you could be a prop firm manager. Or not a prop firm manager, but, trade for a prop firm where they give you money and you trade that money, and then they give you a percentage of the profits that you earn. You can go that route. Some trading firms, prop firms out there are really good ones, but they need proof that you can be consistent in your profit generation, as well as consistent in your risk management. Are you blowing accounts? Stuff like that, right? Don't go for a prop firm that you got to pay for. It's the other way around. They're supposed to give you money, not you give them money. If they want you to give them money, then that's a prop firm that's already set up for you to fail right off the rip. Because the way that I look at it and the way that other investors look at it is, if you got a proven track record, a proven strategy where you know how to manage risk, and you're consistently profitable, and you've been beating the S&P 500 consistently for at least 3.5 to 4 years, I have an extra spare 150, 200 G's laying around. I'll let you have that. Right? And I'll give you half. People will give you money to trade. They don't want to do it themselves, or they can't do it themselves. So therefore, they will give you their money. You know how many people has begged me to take their money to trade it? It's just, I don't want that responsibility. I like my life the way it is. I don't want and that might do something mentally to screw up my whole process too, just by knowing that the money I'm trading isn't mine. That could screw everything up. So yeah, if it ain't broke, don't fix it. That's why I don't need to go to prop anymore. I trade my own book. I don't need to make billions of dollars a year. What am I going to do with billions of dollars that I can't already do right now? Nothing. Right? Nothing. Billions of dollars for me means that I'm giving 90% of it away. Which would be good, because I could pick the own organization to give it to. And, I'm still early in my career, so there's nothing that says that I won't make $1 billion trade one of these days. If I do, like I said, I'll probably give over half of it away right off the rip. Just donate it. The major stocks impacted, including Stanley, Verizon, AT&T, Nike, McDonald's, according to New York Stock Exchange's website. Trading in dozens of stocks in the year was briefly halted shortly after the market opened Tuesday due to an apparent technical issue. Yeah, it had to be something. A glitch in the matrix is what I said, just by looking at the chart. Many stocks were shown to have abnormally large moves when the market opened, which may have triggered volatility halts, which we know they did, because my boy Ray was all over it. CNBC's Bob Bazzani said on Squawk on the Street that the issue appears to be a technical one, not something that happened on the trading floor. Well, of course not, because the trading floor doesn't even really exist anymore. It's all bots and algos. You see a couple people walking around behind them, but most people trade from home nowadays in their pajamas. Now, if they have YouTube channels and they're on camera and all that stuff, then they gotta put on clothes. But when you're like me, you don't have to have clothes on. No pants trading. That's how we roll. We do it with no pants on. Liquidation break strategy on high impact news day. Not usually looking for it. Otherwise, taught to me by, you guessed it. Yeah. Well, I mean, that strategy is only supposed to be deployed on a high risk news event day. I can't remember exactly what happened on that day. I just remember I lost money. You made money. Right? So there's a lot to it, guys. There's a lot to learn, a lot to cipher through. But as far as data analytics and all that, all you need to do is backtest the stuff that I'm telling you, and you too will be a price action analyst, and you too will be one of the best at it, right? It just takes time and experience. You do not need an IQ of 460 to do it either. You just need to have very sound risk management. You need to have you got to be patient. There's days where I do not even trade. You know what I mean? And people are in the Discord looking for a trade every single second of the day. It's just, they're just not there to take sometimes. Right now, you got all this mess happening. There just sometimes ain't nothing to do in the market. You can make money scalping those little moves as long as you got the right setup with the right exchange. Like if you got a big amount of money, you can work out a deal with an exchange to be a liquidity provider. And in that case, you can scalp the spreads and make money that way. Like there's so many strategies that you can do in the marketplace today. It's just not even funny. So many of them. So many. One thing I've never done and never will do is let an algorithm take my trades for me. All right. I seen someone discussing this amongst themselves on Twitter about discretionary versus robots. And they were pretty much laughing and picking on discretionary traders. That's exactly what I am. I am a discretionary trader. I place my own trades. I execute the fills. I do that. That is what a discretionary trader is. And I'll bet them more than likely that my discretionary trading is better than their bots ever could be. Bots make mistakes. A piece of code gets a space, one accidental space where it shouldn't be, and that whole freaking algo is busted. And then you're feeling exact opposite what you want to happen. There's no way I'm allowing an algorithm to take trades for me ever, or a bot. Not happening. If I can't watch the position, watch it play out, then I ain't doing it. It'll never be like that. I mean, algorithms and stuff like that, they have priced a lot of the edges out of the marketplace. But this edge that I use is been in the markets since trading was a thing. Why do you think I focus on those data points? The open, high, low, and close. Can I look at U.S. oil? Yeah. The open, high, low, and close. Those are the only data points I need. I don't even have to to look at this. I can see where support is just by watching price. Also, that's how long I've been doing it, right? I don't need FinViz or anything to show me what's up and down and up and down. And I don't need the candlesticks. I use the candlesticks to mark off support and resistance, but I could look at just this data right here and make the trading decisions based on just watching this. Just watching that number change. I can see where everything else. As long as I know the opening price, I'll find out myself where support and resistances are. I'm glad that I don't have to do that, because then I would need a piece of paper and a pencil or something to write it down, but I could get the same levels just by watching this. Because I know at the end of every hour, that's a close. So whatever that last tick was on that hour, boom, there's your price. There's your close. Now you know. Price, these are your operating ranges. There's a high probability that, once you set the range, you're going to test back and forth, back and forth, back and forth. That's what price does. Look at these hours right here. Hey, people see this and they're like, that's garbage. There's no opportunity in that. There's opportunity in that. Yeah, there is. Especially with high leverage. You could sell, buy, sell, buy, sell, buy, just depending on how these things close. Right? Let's go look at oil. We did briefly look at it already this morning, but it's going down. Today was a news day. What happened? Yeah, we're going to wrap it up soon. We've been live for 2 hours. What happened? I looked at this. I didn't see anything that indicated high risk news event. Service PMI is not really a big news item. It's 2 stars. Manufacturing PMI. 2 stars. I guess it's a medium. It's not high risk. It's medium risk, right? On this website, it's medium. Maybe on a different website, that's a high risk event. 46.8. So you did better than you were expected to do. They were expecting a worse print than last month, and they got a better one. That should be good news, not bad news. Bitcoin didn't really do nothing off of it. Oil's getting a nice expansion here. So naturally, we would have been watching the first initial tag of this level. So yeah, as long as your closing dailies and weeklies are under $80, then you have to be bearish, right? You have to be. Not hourlies, dailies and weeklies. You got to give price time, because this right here could go on for days to months. Bitcoin literally traded 1 year at the yearly open price for damn near like 7 months. It wasn't until the last quarter of the year that it traded away from the price. So like I said, everything I teach you works It just doesn't always work. Nothing works all the time in trading. Nothing. But everything works occasionally in trading. Right? Head and shoulders breakdowns work occasionally. Cup and handles work occasionally. But there's also a lot more times that it doesn't work. The only reason, like, as far as why I'm bullish oil for 2023 is their China reopening, right? That in itself should cause more demand for oil. But since they get their oil from Russia, might not do anything for WTI or US oil, right? So these are things that you just for that kind of analysis, you're going to have to pick somebody else's brain. But for my style analysis, which is simple, if you get under 80.54, as long as you're closing weeklies under it, you're going to be looking to take sell positions at resistance. You're going to be looking to short it. Last year's open, not concerned or worried about it. It could act as support, but like, I'm not going to be looking to be a buyer here, right? If oil's going to be bullish, I want to see it remain above the yearly opening range. But if the reopening in China goes smooth and higher demand comes for oil, OPEC, oil is one of the most manipulated assets out there, which is why I don't trade it very often. Every asset can be manipulated, so we trade the manipulation. We've learned how to trade that manipulation, right? The liquidation break strategy is trading market manipulation. You're waiting for the market to stop people out. Then you're entering your position. Or you're taking a position at a lower price in expectation that the market is going to go up to do what? To liquidate stops. So, like, the whole strategy is designed around liquidations. That's what it's for. That's without them, you don't have nothing. If double tops and stuff like that worked, that's what everybody would do, and everybody would be rich, because there's nothing easier than just shorting a double top. But typically you want to be long, aiming for that double top to be busted. Or wait for the double top to be busted and then sell into it. And gold has been on the rise because of the dollar weakness. If the dollar gets strong again, what did I do wrong? XAU. There's an S there. Yeah, I mean, it looks phenomenal. You're almost back at all-time highs on gold. I don't know why gold got so bullish. I know, obviously, it would be bullish because of dollar weakness, but you're back almost at all-time highs. These are your all-time highs on gold. Those are your all-time highs. You're at a very key level, my friend. Very key level. And remember, the dollar is at a very key level too. The dollar is at monthly support. Gold just happens to be at monthly resistance, which is also quarterly resistance on gold. So be very careful right now. It's bullish. No, I didn't want that. I wanted a daily. And it's been a one-sided market, man, since the year opened. Just straight up. So gold has been very strong. I don't know why. But you're trading under the liquidation now. So now you got to be concerned. This wick on this bearish candle, that was the high wick. Right? You can see today you traded above it. Now you're back under it. So if you stay under 1937.58, you do stand the chance of seeing a pullback. But your next daily support is 1904. And then under that, you got 1875, 1830, and then naturally your yearly open at 1823.79. You got several areas in this uptrend where you can look for potential buying opportunities on gold. If the dollar finds support, then I expect this will pull back along with Bitcoin and other risk assets. But I am looking for it to just pull back. Gold could be getting priced in due to recession fears. But we know it wasn't an inflation hedge because it was bearish for most of 2022. It did the same thing that risk assets did. The first part of the year, it was bullish. Let's change the color on this and make it yellow. And then bring it down here. Right there. So right when that war started, you got that bullish spike. And this is where people were bullish again, and boom, down it went. Once you broke down, then it was pretty much, yeah. You found the bottom, and you've been trading up ever since. Look at those yearly opens. Two of them real close. That's 2022, 2023. That's unique. As long as you're trading above 1828, man, I'd be looking for bullish entries on oil. For the sell-off, yeah, it's probably because it liquidated yesterday or the previous day's high. You're at a very key level, being that monthly resistance. And then this right here was the high. So that was your range high from the yearly open. That's your range high. So when this happened, it looks like a legit breakout, but ultimately it was sold into. Boom, 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 boom. Now you got a bullish engulfing. I don't think I would trade oil today. I I myself would have shorted oil had I been awake, and I would have been, because I come to the desk roughly around 6 o'clock. This morning I was late, so I would have had to take the trade based off of this resistance right here. But I damn sure would have. Because I shorted, you know what I mean? I shorted Bitcoin. I would have shorted gold too. But I would have taken profits at intraday support, which would have been there. So probably would have got entry on the 8 o'clock or the 7 o'clock candle. Then the 7 o'clock candle's high would have been my stop. I probably would have taken profits on this candle right here. I would still be in that position just based on where price is now, but random market violence right there. It seems like you got a little bit of that going on across all the markets. Because we got that yesterday on Bitcoin. S&P 500, yeah, took that news well. This one right here was one that I talked about yesterday. And there's still a potential opportunity on it if it comes back up and tests resistance. Let's see if I can get this just right. Right here. Yesterday, you can see how it's trading here. Traded right up to it, man. There's your intraday chart. So we were watching this for potential opportunities. I ended up closing above it. Maybe tomorrow or the next day, keep it on watch. I missed this one and it was on watch. So even though I have an asset on watch, it doesn't necessarily mean that I'm going to get it or even catch it. But that was definitely on watch for a short. And that's how it played out. So yesterday, I was watching this at 1 o'clock is when I decided no longer did I want to short this. Not yet. And you can't short these things going into like 5 o'clock because in FX in the Forex market at 5 p.m. that's when you get a new daily candle. That's the close of each one of these daily candles and the open of the fresh daily candle. Your spread opens up to like 20, 25, 30 pips wide. So at 1700 hours, wherever this was when it opened, right here. You stopped out. Let's say you went 30 pips high. Your spread did. The price didn't, but the spread did. So any short position that you took yesterday at 5 o'clock would have been stopped out. So that's why I say don't, wait until at least wait until the Asian session open, which is at 8 p.m. That will give the spread time to chill back out. So 8 p.m. is 2000 hours. There would not have been a position to take there, but there damn sure would have been a position to take at the London Open. Right there, I would have shorted the hell out of it. And then my stop would have went right above the high of day, which was there. And that would have been a beautiful short trade today. But the opportunity happened when? At the London session. And I was asleep. And I don't want to be a buyer, so I'm not going to try to pick lows. I want to be a seller only on this. And I'm only a seller on this at resistance levels while it's trading under 141.70. If it's trading above 141.70, then I will be looking for buying opportunities. And you get those opportunities most of the time from your dailies. So basically, look where this thing turned around at today. So this is your day's range today. We go back intraday on the hourly. You can see, boom, right there's yesterday's open. So you have not been able to close an hourly candle under yesterday's open. Therefore, if you were long or had a long bias on this, where would you look to be getting long? Naturally, you would be looking here for long entries. But no, don't get long now, right now, because I'm looking to sell it at a resistance. So it might not be today, it might be tomorrow or the next day, but this is probably going to be your weekly high. Probably going to be the weekly high. So we need this to pull back to a level of resistance. Whether that's going to be today's close or yesterday's close. And hopefully it happens around 9:30 tomorrow. Hopefully we get an opportunity on this. But there's others here. You're unchanged on the day on USD CAD. USD Swissy. Someone asked me to look at that. You can see here you bounced off the yearly open, but today you got above it and then boom, right back under it. So this could be a selling opportunity as well. It's at the bottom of a downtrend, so I'm not loving the idea of selling it down here. But a trend is a trend is a trend. If this is going to continue to go lower, then I want to sell it as close to this as possible. So we'll see how today closes. You close above it today, then naturally we're not going to be looking for shorts on it. All right. So with that, we'll go ahead and wrap it up. You guys have a fantastic rest of your day. We will see you Thursday morning with another, hopefully, opportunity to catch a trade, make some money. But until then, make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.